Guy, how far now?
Omo, I'm not really fine. Do you know they paid me last week and right now I can't even boost up to 10,000 naira in my account?
Seriously?
Yes.
Did you budget?
Which one is budgeting? Now I'm not a politician.
That's why your money is missing like NEPA lights.
But I didn't buy anything serious, shoes, bags, the thing that guys need now. And just like that, fiam, the money has disappeared.
But it's all these little things. That's why it's taking your money.
Nah. But what should I do?
See, you have to create a budget. You have to track your spending. You have to prioritize your needs over your wants. And you have to save before you spend, not the other way around.
So what you're trying to say that this money management thing is no child's play?
It's no child's play at all.
The Money Click is an annual financial literacy program to help you up your money game. The Money Click is not just about money, it's about mindset. So in the Money Click program, go beyond budgeting to rewire your thinking, to rewire your mindset, to change your thinking about income, to change your thinking about money management. So we'll help you grow your income, we'll help you manage it, we'll help you invest with confidence. Money is not just about what you know. Money is more about how you behave. And every day in the Money Click program, what we'll try to do is to influence how you behave about money. This is not just financial education. This is financial transformation. I will hope to see you become a part of it. Thank you.
All right. Hello, everyone, and good afternoon, and welcome to today's Wednesday live class. And it's a new month. Yes. So, happy new month to you all. Very happy new month to you, and welcome to the month of April. We're glad to be here today. Very happy to be here. Yes. We're still continuing in our series, in our stock series. It still continues into parts of this month. The stock series goes on until we finally launch our How to Make Money from Stocks class that is going to be coming up very, very, very soon. If you've not registered for that class, this is the time for you to do so. Please try as much as possible to be in How to Make Money from Stocks class. So welcome to this live session today. Thank you for joining us wherever you're joining us from. Is you Facebook? Yes, a lot of people on Facebook, right? Shout out to you all. Please, if you're just joining us, just do us a favor and share this live to your contacts and have more people join us to come and learn. Right? It's a free class. It's a free class, so the more people we bring, the merrier. Right? Thank you so much, everyone, for joining us. On Instagram, on Facebook, on YouTube. Thank you, and happy to have you all here today. So today, we want to look at a very interesting thing today. Remember, we're still on the stock market, right? Everything we're dealing with, what we dealt with throughout the month of March was all about the stock market. So if you missed any live session in the month of March, I implore you to go back and watch the replays. The replays are on Instagram, the replays are on Facebook. They are also on YouTube, for you to catch up on all the things that we've done, right? And if you watch all the sessions that we've had so far, it would prepare you very much for the course that is coming up later on this month, the How to Make Money from Stocks, How to Make Money from Stocks class. It is going to be some form of preparation for that class. So I implore you to take your time and watch that. Watch all the classes every Wednesday and Thursdays, right? Live sessions. I want you to watch all of them, and they have a good understanding, from the background. And part of that background understanding is what we're still giving out here today. Yes, I see Mr. FOB here. Thank you so much, sir, for being here. And in fact, as I'm seeing Mr. FOB, and maybe I'll just even announce for those in the March cohort that we're going to be having another session just like this in the month of March for us to have it more tailored towards what we are doing in the March cohort. The truth is, what we do every month here on this live, even though it's free, is tailored towards the curriculum of January cohorts, right? So the Friday live sessions we're going to start this Friday will now be tailored for the for the March cohorts, right? And every other person can also join because, of course, you can also come and learn and understand some things that you might have missed out. Even if you're in the January cohort, you come back and understand some things you might have missed out, when it was talked about during your own time, right? So we're going to teach a lot of new things, and we're going to repeat some things that we've also taught before in the Friday live sessions. So I implore everybody, especially the March course people, to be a part of it, right? And also, yes, I think that's that for that, so that we get into what we have for you today. All right. So, what causes prices to rise or fall? What causes prices to rise or fall? And then before I go on, I also want to remind you again that the How to Make Money from Stocks webinar is coming up. A lot of people have been asking me, oh, what do I invest in? Where do I put my money in? And the truth is, it's not about where do you put your money in. It's about understanding what you're doing, right? It's about, gaining the knowledge. I'm not saying you should know everything, but you should have prerequisite basic knowledge before you get in and start investing. All right. So please, getting the knowledge is very important. That's why everybody should be a part of this class. Yes, I think I just remembered what I wanted to say earlier about the January cohort and March cohort. Like I said earlier, so the January cohort, everything we do in the Wednesday and Thursday live follows through with what we did, what we're doing in the curriculum of the January cohort. So the Friday would be about what we're doing in the curriculum of the March cohort. And the thing is, if you're not in the Money Click program, it will be some bit of difficulty piecing all these pieces together. That's why, yes, these classes might be free, but until you understand what we're talking about in the Money Click program, these classes will not make full sense to you. That's the truth, right? So thank you very much, everyone. And let's get into what we have for you today. So what causes stock prices to rise or fall? What causes stock prices to rise or fall? I don't know if anybody has ever thought about that. I say you, man, Tita Academy. I say you welcome and thank you very much for being here today. All right. Tita Academy, I don't think we saw you last week. I don't know. I might be wrong. All right. Okay. So thank you so much, everyone, for being here. So why do stock prices rise and fall? These questions always come up. Sometimes this is not a question that a lot of people ask themselves. The people just know that the price has gone up or the price is going down. But most times people don't really take the time to understand why. What is causing the prices to rise and fall, right? Now, the trick, not even the trick, the secret, which is open, right? The open secret is understanding the forces behind every price move. Now, at the surface, stock prices look like they're unpredictable, right? But underneath, all the movement comes down to one simple law. One simple law. The law of demand and supply. Stock price going up or down is determined by demand and supply. Demand and supply. Yes, Tita Academy, I know I didn't see you in the last class. Yes, ma'am. Welcome back again. All right. Okay, welcome back. All right. So stock the forces of demand and supply determine what happens with the stock prices, right? So here is what happens. When there's more buyers than sellers for a particular stock, the price goes up. Did somebody get that? When there's more buyers than sellers for a particular stock, the prices go up, right? Why? Because there's much demand. There's a lot of demand on that stock. So it will cause the price to go up, right? Now, on the other hand, when there are more sellers, right, than buyers, the price goes down, right? So it's more like when we all understand demand and supply from normal economics. The same thing applies here, right? When there's a demand for a particular thing, the price is bound to go up, because once there's a demand for something, the value goes up. That's the truth. When the demand for something reduces, the value goes down. And once the value goes down, the price will go down. So when you see that the price of a stock is going down, it means that more people are selling off that stock than people who are buying it. When you see that the price of a stock is climbing up, it simply means that more people are buying that stock than selling it, than those who are selling it. Right? All right? But the truth is, this just explains how the prices moves. It only explains how the prices move. But the real question is, why do people decide to buy or sell? That's where the real question is. Because yes, you've come to understand that it is the buyers and the sellers that determine the up and downs of the stock price. The real question now is, why do people decide to buy or sell? Why? What's really behind that? Right? Why do people really decide that, oh, I want to buy this, oh, I want to sell this? Now, let's break it down, right? Let's take it one after the other. Number one reason why people decide to buy or to sell is company performance. Company performance. And it's very important, because if you don't understand this thing and you think prices just go up randomly and come down randomly, you will just go and put your money in the wrong place, and before you know it, prices will keep crashing and might not come back again if you put it in the wrong place, if you don't take note of all those things that we're going to be talking about right now. Right? So number one is company performance. For me, this is the real backbone for a lot of decisions, why you should buy or you sell. Right? So over time, stock prices follow business performance. So if a company grows in revenue, if a company increases profits, if a company expands successfully, what will happen? More investors will want to own it. Right? So people want to own a stock company because these people are making a lot of revenue. Right? The people who want to own the profit, the stocks in the company because they're making a lot of revenue. Not just that, still they're making a lot of profits. They're making a lot of profit. Some people have a lot of revenue, but their profit margin is low. Sometimes it's because their operating cost is so high. Right? We're going to get into all that, determining operating cost, comparing it, with revenue and all that, when we get to the how to make money from stock class. Okay? So if your company is growing in revenue, they're increasing in profit, it's expanding successfully. People want to be a part of it. Everybody wants to be a part of success. Right? Because they're making money, they want to be a part of it. So what happens? Investors will rush in to go and buy more of that stock. And when they do, demand rises. And once demand rises, the price goes up. And that's the reason why I always tell you something. When there's a lot of noise, right? When a stock is trending, that is when there's a lot of demand for it. And sometimes it's as a result of push from the noise on social media and all that. And as at that time, it's not the right time to get in. Because the people who will be making money from that stock are people who bought even before the hype came. So when you're buying during hype, you're buying when the price has already gone up. Right? And if you remember, what Benjamin Graham always tells us is not just about buying a stock, right? It's about buying it at the right price as well. You need to ensure you're buying at the right price, because sometimes if you're not lucky, you will buy it at the price that is too exorbitant for it, especially when you buy it in hypes. All right? So the more the company performance looks good, the more people want to buy into that stock, the more they're buying, the more the prices rise. Right? As the more they buy, the more demand increases for that stock, and the prices just keep going up. Now, if the company struggles, if they struggle with revenue, if they struggle with profits, if they are struggling to expand, if they're in debt and getting into more debt, It means that they will have declined sales, right? If it's about poor management that is leading to all these things, and they're just having losses and losses and losses, right? Investors will lose confidence. Nobody wants to put their money in a business that is failing. And when investors lose confidence in a stock, they sell. And when there are more people selling than people who are buying, the prices will start to fall. Right? The prices will start falling. So that's the reason why we say that strong businesses equals strong long-term price. Right? So you might be getting into a business, right, that today might not seem like the prices are that okay, but you know that looking at the fundamentals, right, looking at the company performance, this is a solid business. On the long run, everything is going to fall into place. And there's a comment here by Tita Academy that I want to read out to everyone. So she said, this one you're seeing there, I learned it the very hard way. Put a lot of money somewhere the very month I joined Money Click last year due to plenty hype. Now I dey pray make my money come out. Okay, you see, right? So it's not about buying when there's hype. For like right now, like a lot of times when people come on social media and say, "Oh, companies to buy right now," I just laugh. It's very funny, right? When they are just giving you the recommendations of stocks you can buy right now. They give those recommendations when there's hype. Or it's just funny when somebody comes and gives you stocks that trended for the day. Trending stocks for the day, right? Those trending stocks for the day that's the wrong time to buy. You want to buy a stock when it's already trending. People who are making money from it bought it before it started trending. Right? All right. Okay, thank you so much, Ma, for that comment. Let's get on to the number two. The number two is expectations about the future. Remember, we're looking at the things that make people decide to either buy or sell. And why are we looking at it? We're looking at it because it determines why people buy or sell. And because we said that the more people buy, the more there are buyers than sellers, the price goes up. The more there are sellers than buyers, the price goes down, right? So number two is expectations about the future. And this is a place where a lot of investors get confused, right? A lot of investors get very confused here. The market is forward-looking. So prices move based on what investors expect, not just what is happening now. So that's one thing you need to understand, all right? So good results, but bad future outlook, prices can fall. Poor results, but strong future potential, prices can rise. Right? So you can see a company today that looks like everything looks good, but their stocks are going down. It might be because people are seeing that these people, there's no future, even though everything looks okay today. There could be also companies that things are rough for them today, but people see that in future, these guys are going to be the giants. This to stand the test of time. This is just a rough patch along their way. Their prices can also rise. Right? So the market is always asking one very crucial question, which is one question that you should have at the back of your mind if you want to become an investor that will stay abreast of things and win in the market. Right? It's always asking what happens next. What happens next? So like a lot of times when I tell people, like when it comes to the market, the motor industry market, where are we heading to? See, if you can correctly predict where the motor industry, the vehicle industry is heading to, right, in the next 10, 20 years, you can make money. You can make money simply by being an investor, right? Why? Because most of the time, what moves the price is about expectations of your future. People are looking beyond just today, right? Okay. Then another number three is news and information. News and information. So markets quickly Markets react quickly to new information. You know, the moment there's news in the market, people react to that news, right? A typical example is in 2022 when Cristiano Ronaldo decided that he was going to sign for Manchester United for the second time in his career. What happened? The market reacted to that news. The stocks of Manchester United started going up. For the first time in a few years, it started going up. Why? Because of the news and information they had. Right? So sometimes when people hear things about a company, about a stock, about a business, it will cause them to want to invest or not. All right. Sometimes it happens on the opposite when somebody is leaving the company. Sometimes people hear about the earnings report of a particular company. They go and buy. Why? Because they hear that these people are doing good. Sometimes they hear about the earnings report and they say, oh, this company is not going anywhere. Wow, really? They just sell off. Right? They sell even before other people get the news and the price starts falling. Right? Some people buy before other people get the news so that they'll be in a good position of margin to make money by the time other people hear it and the price starts climbing. Another reason why another kind of news that people hear and decide to buy and sell is government policies. Government policies. There's a policy the government will make today, and people will decide, you know what, I think this market is not for me. Right? For example, even in Nigeria, a few years ago when the first subsidy was removed, it affected a lot of investors pulled out of the Nigerian market. Just simply because of that. Simply because of that. So the news moves the market. Right? The news moves the people are constantly listening to the news. So you need to also listen to the news to stay abreast of what is happening around you. Sometimes it's leadership changes. A company might decide today that, okay, we want to change leadership and bring in somebody who has performed well somewhere that other people know and bring him to a particular company. The moment people hear that, this person is coming to this company, people tend to buy into that company because they know what this guy can do. Look at we've seen him do this in company B. In company A, we're sure, we'll have no doubt he will do better, he will do more. Right? So they'll start buying into the stock. Sometimes it works on the opposite, that a leader, let's say a CEO resigns and decides that, you know what, I can't be part of this company anymore, I'm leaving. People also sometimes tend to leave with the person. They decide that, you know what, if this man is not leading this place, I can't put my money in it. Right? Sometimes it's new products. New products come in and people want to buy more and more because they feel like, oh, this product shows that these people are here to stay. Just like, for example, companies are always bringing out new products. It's always pushing people to want to buy more because it brings that confidence in people. And when they see that the new product is selling, just like when Tesla brought out the Cybertruck and the Cybertruck was selling at some point, right? It's pushed a lot of investors to buy more into the Tesla brand. All right. So new products also determine all these things come from news. Sometimes it's not even about releasing the sometimes it's just about announcing that this product is going to come out. Oh, we have a new product that can do so and so, and it will change a lot of things in so and so, and that's it. People start buying into the stock. Why? Because they believe this is it. This is it. Right? They believe this is going to create a lot of buzz. This is going to make these people a lot of money. I want to be a part of it. All right? I want to be a part of it. Okay? Then the next. So there's one more thing here. There's one more thing here for you to take note of with the news and information. The truth is, when there's good news, right, there are more buyers, prices will rise. Right? When there's bad news, there'll be more sellers, prices will fall. Right? So another thing you need to take note of is that not every news matters on the long term. Not every news matters. But in the short term, prices react to news. Right? So prices react in the short term, but in the long term, it might not really matter. Right? And that's the reason why we always tell people, if you're investing, have a long-term mindset. Right? So you have company A, and company A at the moment is not doing so well. right? But you know that this company is a company that will stay for many years to come because of the kind of products that they have. But everything might not be good right now, right? So it might happen that, oh, it gets out of the news that this people's earnings report is not so good, it's not looking good for them. And then prices start going down because people feel, if their earnings report is not good, they're not even making money, let me get out of this place, right? But if you have a long-term mindset, then you know that, no, this is temporary, right? Whatever is happening with this business right now would not stay for long. It's just a rough patch. They'll get over it. If you stay on the long term, by the time people realize it, in fact, as the price is falling, you buy more. You buy more. Then by the time people realize that, oh, I think we made a mistake, these people have started bouncing back and things are beginning to look positive. That's when you start making money. Number 4 is emotions. Emotions, right? And the two key emotions here that affect people buying or selling is fear and greed. Fear and greed. For me, I think they are one of the strongest drivers of price movement, right? Greed will always lead people to rush to buy, right? And then prices will rise quickly. Fear, on the other hand, will always push people to rush to sell. And then before you know it, prices will drop fast. And if you check so very well, most of the times when you make mistakes in investing, these two emotions play a part, right? Even if it doesn't play a part in the beginning when you buy, it plays a part when you sell. It plays a part when you sell. Because something happens, you're scared, you're rushing, and you go and sell. All right? So when the market is rising too fast, when there are bubbles, greed is always one of those emotions that is behind it, right? And when you see the market, when there's a crash in the market, when the market is falling too hard, you hear market crashes. One emotion behind market crashes is fear. It's fear. And Benjamin Graham would always tell us that in the short run, the market is a voting machine. In the long run, it is a weighing machine. Did you get that? In the short run, the market is a voting machine. In the long run, it is a weighing machine. It means that on the short term, emotions will dominate. But on the long term, values will always win. Value always wins on the long term. Number 5 is economic conditions, right? That's the overall economy affects stocks. It affects stocks, right? Now, excuse me. The key factors here is interest rates, inflation, employment levels, currency strength, right? All these things, how they tend to move determines what also happens in the market. For example, when there are high interest rates, what does it mean? It means that borrowing is expensive, right? Businesses are low. And what it might imply will be that prices may fall. There's a strong economy, businesses will grow. Sorry about that. I just had the very little hitch right here. Okay, so when there's a strong economy, businesses will grow, right? Businesses will grow, right? So number 6 is industry trends. I'm talking about economic conditions. I think if you live in Nigeria in the last 3 years, you would have seen how much the economy affects businesses, right? And the implication even on the stock market. That happened right in our eyes, at the beginning of this administration. Number 6 is the industry trends. So sometimes entire sectors move together. All right. Remember, I'll give you an example. When there's rising oil prices, what happens? Energy stocks tend to rise. Yeah, energy stocks tend to rise because they feel that, oh, the oil business looks like it's profitable right now, so people tend to buy more into energy stocks. All right. When there's tech innovation, tech stocks get to grow. I even give you a good example. During the boom of AI from 2023, 2024, 2025, we saw how companies that were into AI were booming, right? And how we saw how companies like NVIDIA had sprung up from where they were. Why? Because it was not just because of NVIDIA, it was because of the whole balls around AI. So the whole AI industry was booming, and that's why NVIDIA and some other companies that were into AI too were pushed up. All right. Another thing that also affects sectors are regulations. So when there are regulations around, a particular sector or industry, it tends to affect all the stocks within that industry, right? Because it's affecting all the businesses within that industry. All right. So money flows into sectors where investors see opportunity. So if investors don't see opportunity in a particular sector, it doesn't matter what stock is there. It doesn't matter the stock. They just do not want to put their money in that sector. All right. For example, if it seems like, oh, the oil sector is no longer a lucrative business anymore, people will no longer put that. It doesn't matter which company it is. So far, it's a company that its earnings are based out of oil, the people want to buy, right? So the sector matters a lot. Or for example, during the COVID era, that the transportation sector, the aviation sector was badly hit. A lot of people were not putting their money in the aviation sector because at that moment they were not making money. At that moment, a lot of them even needed bailouts to stay afloat, right? So those things affect how investors put in their money, right? Number 7 is supply of shares. These are another thing that affects how people buy. All right. This is looks less obvious, but it's also important. So if a company issues more shares, the truth is that price may drop. Now, when companies issue more shares, right, and prices drop, it's called dilution, right? Called dilution, right? Now, if it buys back the shares, the prices may rise. All right. So the truth is, fewer shares plus strong demand leads to higher prices, right? So, and this is what sometimes some investors are looking out for, right? Now, sometimes investors are looking out for some companies and they're asking themselves, how often do they dilute their shares? How often are they bringing out more shares? Right? When they bring out more and more shares, when this dilution happens, do they do any buybacks? Right? Now, most times when they dilute, they don't buy back. Most times when they buy back, that's when the prices rise. Right? Let me put it out again. Let me explain it again. These are two opposite things that are happening. Right? A company says we want to issue more shares. When they do that, it dilutes the prices of the shares that are already in the market. Why? Because they are pumping in more shares into the market, so prices will fall. But when a company is buying back its own shares, when they are buying back their own shares, it shows that they are increasing demand on their shares and they are putting fewer shares in the market. It will lead to the increase in the price of that share. All right. And a lot of times when companies are buying back their shares, it shows you that they have a strong position financially, right? It shows that they're in a very good position, and that's why they're buying back the shares from the market, right? And if a company is issuing out more shares, it means that, oh, they want to raise more capital and they might not be in a very good position. Okay. So all those things are things people look out for, right? when I want to buy a stock, I want to know how many times in the past few years have you diluted your shares, or have your prices been diluted? Okay, so fewer shares, strong demands all lead to higher prices. Then number 8 is, which is the last one we're going to be looking at, is sometimes, okay, market sentiments. Market sentiments and hype. That's number 8. Market sentiments and hype. Market sentiments and hype. So market sentiments and hype is another thing, is another factor that cause people to want to buy or sell, right? So sometimes prices move simply because everybody is talking about it. Just that. Everybody about it, so the prices start moving, right? And because everybody's talking about it, people decide that, oh, this is the time to buy. Oh, everybody's saying, my favorite celebrity just talked about it, I have to buy it. Sometimes prices move because it's trending online. It's trending online. Sometimes prices move just because people don't want to miss out. It's not like there's any strong fundamental pushing it. People just don't want to miss out. Everybody's talking about it. They said, this stock, this is the in thing now. If you don't have it, you don't know what they are talking about. You are not there yet. So some people are buying because, they just don't want to miss out. FOMO, fear of missing out. They just don't want to miss out. So you just buy. No other reason. So people buy just because it's trending. Some buy because, their favorite celebrity or influencer or content creator just talked about it. So you just go and buy. Right? But the problem with this kind of purchase, the problem with trends, the problem with hype is that it is temporary. It creates temporary demand. So hype can push prices up, but it cannot sustain them. So when that hype happens, you rush in and go and put your money and buy. Give it some time. Give it a few months. The price will start coming down. Why? Because hype cannot sustain price. It can't sustain it. So by the time prices start falling down, and it start falling faster than it even went up. And if you're not careful enough, you're hooked. If you're not careful enough, you get stuck. You get to a position where you've lost so much money, you don't know if you should sell, if you should leave it. Right? And that's why you should avoid hype. Avoid sentiment. Avoid, if you want to buy, you're talking about, because just you heard everybody's talking about it, that's just the reason why you want to buy. And I will tell you, and I'll tell you this again, right? When everybody is talking about it, it is the wrong time. It is most likely overpriced. Some people are talking about a particular IPO. It's all over the social media. An IPO, I don't want to mention the names, that is coming up very soon. Everybody is talking about it. This IPO. The truth is, if the hype continues, this IPO is going to come overpriced. Give it a few months or even a year, then you get to know the real price. Right? Those that have ears will hear. Okay? So stock prices are not random at all. Stock prices are not random. All right? Yes, if everybody is talking about it, then it's already late. Stock prices are not, they're not random. They're not random. They are driven by a mix of fundamentals. And when I mean fundamentals, I mean business performance, right? It's also driven by expectations, future outlook of the business, or future expectations of people, right? It's also driven by psychology. And when I'm talking about psychology, I'm talking about emotions. And the two emotions I'm talking about here are fear and greed, right? Fear and greed. So a very simple way that you can look at price movements of the stock market. Prices move based on news. They move based on noise, and they move based on emotions, right? In the short term. So in the short term, these three things determine price movement: news, noise, emotions. All right? On the long term, price follows value and performance. All right? So the news might be saying something else about a stock today, but on the long run, it will get to outperform. All right. So the news is always about short term. The noise is always about short term. Hype is always short term. Emotions are always short term. And trust me, emotions have always pushed the market for as long as you can remember. Human beings are emotional. So if you want to also get into the market and get in at the right time and get to do it right, you must first understand how to control your own emotions. And you must begin to understand how people react to their own emotions. Okay, but here is what I want to tell you. If you focus on only price, the market will confuse you. If the only thing you're looking at when you want to buy is you want to just go and check, oh, how much are they selling now? You're going to get confused. Trust me. But if you focus on the business, if you focus on the growth of the business, if you focus on its long-term value, then you're going to begin to understand why prices move, right? And not just that they move. You understand the why. And understanding the why is important to you making your decisions. All right. So understand that prices move every day, but value builds over time. And that's the reason why I always tell you, have a long-term mindset when you're investing. When you have a long-term mindset, you stop checking your app every day to know the price movements. The price movements are short-term, and prices will move every day. It's part of the market. The market is naturally volatile. So you buy a stock today, every minute you're checking, oh, has it gone up? Has it come down? No. If you buy into a strong business that will grow or that is growing or that has good growth, right? One thing is sure is that it will bring you value. But value comes with time and you have to be patient, right? And if you want to remove emotions, right, ensure you invest on the long term. And when you invest on the long term, you will start neglecting those daily price movements. Okay, so the investors who win are those who learn to ignore the noise, right? The investors who win are those who understand the forces behind the movement. So you need to understand the force behind the movement. So if you want to become confident in investing, you want to stop reacting to price movement, right? You want to start understanding what drives them, okay? Because the moment you understand why prices move, that moment, you stop being controlled by the market. Trust me, a lot of people are controlled by the market. They really don't know what they're doing. They're just following. As they say, they say, are we moving to point A? They say yes, they move to point A. Oh, this is what we're buying now. They say yes, they buy. So you need to put yourself in a position where you're not just reacting, you're building and you're strategic about it, right? In a position where you're not just doing guesswork and luck, you have a system for investing. You know, most people enter the stock market with the wrong expectation. And those wrong expectations are, oh, I want quick money. Where can I put my money today? And in the next 6 months, it will double. Those are the expectations, which is wrong, right? People ask themselves, which stocks will double? Wrong expectations. People ask, oh, what is the next big thing? Nvidia was big. What's the next big one? Wrong questions. And that's exactly why most people lose money, because they're asking the wrong questions. Because the stock market doesn't reward excitement. It rewards discipline, it rewards understanding, it rewards structure. So the reality that most people won't tell you is that people are buying stocks they don't understand. People are following hot tips on social media. People are reacting to price movements. People are investing without a plan. They are just buying anything they see, they just buy. See, there's a strategy to investing. You must understand your own strategy. It's just like I always tell people that you must have a goal before you start understanding how to correct and manage and structure your finances. There must be a goal. The same with investing. There must be a strategy. There's a strategy for investing. And when you don't understand your strategy for investing, you buy anything you see. Right? You buy anything you see. You react to any movement you see in the market. You panic when prices drop. You sell too early. There's no confidence. And it's not a problem of the market. It's a lack of structure. And that lack of structure stems from lack of understanding. Right? And that's what the How to Make Money from Stocks webinar will do for you. And it's not theory. It's practical. It's step-by-step system that shows you how to actually make money from stocks the right way. You understand how money is really made in the market. You learn how to pick the right stocks. You learn how to build a simple investment strategy. You learn how to master your emotions. For me, it's everything. Understanding how to master your emotions when investing in the stock market is everything. If you do not get it right, you will make a lot of mistakes. You make a lot of mistakes. All right? So you need to avoid a lot of costly beginner mistakes. See, you don't have to make these beginner mistakes. Some of us made the mistakes. You mustn't make those mistakes. Years ago, um, I remember when I was getting into the university. So my eldest brother called me and he gave me an advice that has stuck with me till today. He said, experience is the best teacher, right? But it mustn't be your own experience. Emeka, experience is the best teacher in life, but it must not be your own experience. So try to learn from other people's experience so you don't learn from your own. Sometimes when you learn from your own experience, it's costly. Trust me, it's costly. So one of the things that I've always tried to do is to avoid learning from my own experience. Rather, I want to learn from other people's experiences. All right. And this is a webinar where I get to teach you and you also get to learn from my own personal experience in the stock market. Okay. All right. So this is the time to come in. Early bird for this course ended yesterday, but we've extended this to just one day, which is today alone. And after today, we're going to go back to the original price. So join the How to Make Money from Stock class today, because the difference between people who make money in the market and those who don't is not opportunity. It's not. It's understanding and execution. Right? And this is what will come to the end of the class today. And a lot of people in the March cohort of the money have been asking me, can we join? Can we join? Can we join? Yes, you can if you want. You can join the class, right? But preferably, we always have the how to make money from stock class, from time to time, right? And you can always join in the next time. But if you feel this is the right time for you to join and you can't wait, trust me, you're in the March cohort of the Money Click program, you can join. You can join. And if you're in the Money Click program, you're in the January cohort, there's no reason for you not to join. If you're not in the Money Click, any of the course of the Money Click program, you're an outsider, trust me, this is a big opportunity for you. Join the How to Make Money from Stock class today, right? You're getting it today for 17.5 as an outsider. And after this, that's for the what is it called? Early bird. After early bird, it goes back to the original fee of 25,000. And the truth is, the next How to Make Money from Stock is not going to be this amount, right? Most probably would be higher, cost higher than what it's costing now, right? That's for outsiders. For Money Click people, it will remain same across the year until the end of this year, right? The price will always remain the same, right? So this is your time to get in. This is your time to be a part of this life-changing course today, all right? How to make money from stock class is indeed a life-changing course, all right? So it's one webinar you do not want to miss. So thank you so much, everyone, for being here. Thank you for joining us today. Remember, we're going to be here again tomorrow, right? We're going to be again tomorrow by 12 noon, as usual, on YouTube to also learn some more about the stock market. Every Wednesdays and Thursdays, we are here. And newly, we just added Fridays, especially for those in the March cohort. We are also here by 12 noon on Fridays. And other people too can also join us if they wish to join us. Right? So thank you very much, everyone, for being a part of this program today. Thank you for being here. We're glad to have Okay, thank you so much. The network has just been messing up at this point. We'll end the class. So thank you so much for being here. I'll see you tomorrow by 12 noon. Bye bye.